Dirty dealings, corporate battles, consumer woes. This is Evening 5. Malaysia's economic growth accelerated faster than expected at a pace of 5.9% in the second quarter of this year, thanks to stronger household spending, business investments and exports. The reading is higher than the median estimate of 5.8% growth in a Bloomberg survey, as well as the official flash estimate of 5.8%. On a seasonally adjusted quarterly basis, gross domestic product grew 2.9% in the April to June period. Bank Negara Governor Datuk Sri Abdul Rashid Ghaffur said that with the strong performance in the first half, the central bank believes that growth for the full year of 2024 could be closer to the upper end of the 4% to 5% range. He said household spending will remain the anchor of growth for the rest of 2024, with continued expansion in employment and income, as well as larger policy support. Strong investment activities amid ongoing multi-year projects and favourable financing conditions will also support growth. Exports are projected to expand further this year. Meanwhile, its headline inflation forecast for the year is maintained in the range of 2 to 3.5%, even after accounting for the effects of fuel subsidy rationalisation. Abdul Rashid said the impact of fuel subsidy adjustments should remain manageable, thanks to government measures aimed at minimising cost increases for businesses. For the first half of 2024, the country's headline and core inflation averaged 1.8%. Meanwhile, the central bank is expanding its pilot program for the qualified resident investor to accept applications from eligible resident corporations who have outstanding direct investment assets abroad of 1 billion ringgit and above. A total of about 30 companies are expected to apply for the extended pilot program from 10 companies currently. Privately owned rail company Dhaya Maju Infrastructure Asia has signed an agreement to acquire up to 51% stake in electrical engineering firm Pestech International. This comes just a day after IJM Corp aborted its plan to acquire a 44.83% stake in Pestech for 124 million ringgit due to unmet conditions in the acquisition agreement. In a Bursa filing, Pestech said a heads of agreement was signed for the proposed subscription of at least 1.03 billion shares for 15.5 cents apiece, totaling about 160.07 million ringgit. Dhaya Maju will conduct a due diligence review of Pestech. According to the filing, the proposed subscription represents a strategic and synergistic collaboration between Pestech and Dhaya Maju, aimed at enhancing competitiveness, offering more comprehensive solutions, enabling participation in larger-scale projects, and expanding the geographical footprint of both parties. It said the two parties will negotiate and execute a definitive agreement within 2 months, during which Pestech will not discuss with any other parties any equity fundraising or respond to any approach by other parties. Resorts World Las Vegas has been accused of catering to individuals with ties to organised crime, said a Bloomberg report. Citing a complaint filed by the Nevada Gaming Control Board, the report said Resorts World, a major property on the Las Vegas Strip owned by the Genting Group, is said to have welcomed certain individuals with suspected or actual ties to illegal bookmaking, histories of federal felony convictions related to illegal gambling businesses, and ties to organised crime. The company didn't immediately respond to a request for comment. The complaint reportedly said the suspected or known felons wagering at the 4.3 billion US dollar or 19.16 billion ringgit property included individuals with convictions in US courts for running an illegal gambling operation, money laundering and tax law violations, with one of those accused set to be under contract with Resorts World. Nevada Gaming Control Board Chairman Kirk Hendrick said in a statement that all suspected violations of Nevada's gaming laws and regulations will be fully investigated and disciplinary action will be filed when warranted. Petronas Chemicals Group or PCG flagged several plant turnaround and maintenance activities planned in the second half of the year, which may weigh on output and volume. The plant's utilization rate, a measure of actual output compared to total capacity, improved to 89% in the April to June quarter from 87% in January to March, contributing to an increase in production volume and sales. PCG Managing Director Mazun Ismail highlighted the plant turnaround and maintenance activities in a statement and said its immediate focus is on safe execution of these activities. The so-called statutory turnaround activity in the oil and gas industry typically involves shutting down some refineries' operations for maintenance or upgrades. Turnarounds are typically planned extensively due to the cost involved and potential revenue loss. PCG today reported a 24% increase in earnings for the second quarter of FY 2024 from a year earlier, on higher sales volume and finance income. Net profit for the 3 months totaled 777 million ringgit, compared with 628 million ringgit for the second quarter of FY 2023. Revenue for the quarter rose 8.6% year-on-year to 7.73 billion ringgit from 7.11 billion ringgit previously. PCG declared its first interim dividend of 10 cents per share. ITMAX Systems says it has secured an additional order worth 539.46 million ringgit to install more surveillance cameras and video messaging signages in Kuala Lumpur. Incorporated on October 26, 2001, ITMAX is a solutions provider in the field of public space networked systems. According to the company's filing with the exchange today, the variation order from the Kuala Lumpur City Hall involves 5,000 more closed-circuit televisions or CCTVs and video messaging signages. The contract will last 120 months, comprising 12 months installation and 108 months of service subscription. ITMAX said the commencement date will be fixed according to the work program agreed upon by the company and City Hall. The variation order is the latest on the main contract worth 528 million ringgit, which runs from July 2018 to December 2026. The company has since bagged multiple variation orders, and the main contract has since been extended to June 2029. In May, the company also secured a variation order from City Hall worth 105.3 million ringgit for the contract extension to provide CCTVs and signages in the capital city.